morning, everyone, and welcome to the European crossover webinar. And we're seeing that the euro is still holding its bid fairly decently. And let's go on and move this out of the way. Seeing the dollar just right above this 38% here on this pullback, and really we'll look over the analysis we did on the Asian update. We're still looking for a better pullback here, but this is a key area here on the euro dollar, and we'll look at that analysis. But it is a very, at least as far as the daily close. Look at fairly light calendar today. The only thing we have is at 10 a.m. Eastern, the NAHB housing market, but that's it. We roll into, and that's going to be a shortened week because of the U.S. Thanksgiving Day holiday. Tomorrow we do have German PPI, U.S. housing starts and building permits. Of course, API oil stocks, that's a staple each week. And we did go in and see gold pull down to this 12.19. We talked about this on Friday afternoon or Friday mid-U.S. session. I posted in there the logical target was going to be to come back down to 12.19 because that was the breakout area after we finally, exhausted or got tired around this 12.26-ish area. We finally paired back, and we stopped, actually found some support 22. They pulled back here. And now I'm saying pullback, but kind of pop back up here above 24, and we've dipped down. And that's that key breakout area we've been talking about for a very, very long time. The 12.92, remember from even a couple months ago, where that just stopped the market dead in its tracks as we turned around and went all the way back down into the 1180s before coming back and breaking above 12.19, come back for support. And when we lost that 12.19, that opened the door for us to come back to that key 11.97 we've been talking about. And sure enough, they came back. And as they broke above it, that certainly opened the door for us to move higher. And that's where they came back for support. And we've turned around and jumped back up $3. Actually, almost close to $5 after dipping there. We're looking for the Aussie to come down here to about 72.40 after it reached this has been that intermediate target we've been talking about where the market could eventually get to, which is the 73.20. I think on the analysis we had, I think we even had this, let's see here, 73.25. Remember, that was our bias chart resistance, because remember we were looking for a potential little bit of an overshoot here. They actually made it up here to the 37. Okay, that right up here, nicked that little level there. Right there, actually 73.38, took it out by 1 pip. But we're looking for 73.25. Really was looking for an overshoot, just a slight overshoot of that 73.25. Well, they made a pretty good run. They made it up to 73.34. One more last gasp up here to 38 before then coming back over here, and we're working a little bit lower. But I'm looking for a move probably about down to 72.40, where they'll be looking to restock. And you can see there, so a lot of good touches right there. Good area for them to go in and pull back. Dollar CAD has pulled here. Now, this is still a heck of a buy mode, but I was putting in here that for aggressive shorts, could look to go in and sell moves to 132. With a stop just above 32.45. And we're going to get into the analysis now. Well, before we do that, we're going to cover the stories, and then we'll move into the Asian update analysis on the website and get into the bias chart. But it says the Aussie and Kiwi near multi-month highs as the Fed caution weighs on the dollar. The Australian New Zealand dollars held their multi-month peaks on Monday as the greenback stumbled on concerns about slowing growth amid the federal growth at the Federal Reserve. But flaring Sino-U.S. trade tensions keep both currencies about their highs. We talked about this on Friday because remember we said you would have thought that's why I didn't think the dollar would make another high was that they would have dressed, and a lot of people were thrown off a bit, myself included, that they would have gone and made some comments in regards to the equity volatility and maybe concerns for growth. Well, they didn't, and then like I said on Friday, 2 days before, there's on Wednesday evening, Fed Chair Powell saying, "Oh, I'm a little bit worried. I'm shaking at the knees like I'm going through a graveyard on Halloween." And sure enough, like I said, that offered for the dollar to go in and slide. We talked about that coming into Friday. Is that now he goes and starts to mention concerns where you would have thought legitimately you would do that at the last Federal Reserve meeting. But it says the Australian dollar, which is often played as a liquid proxy for the global growth trade prospects, slipped 0.2% at 73.19, breaking its 4-day winning streak. An agreement in the Sino-U.S. trade war seemed distant after U.S. Vice President Mike Pence said in a blunt speech there would be no end to U.S. tariffs and $250 billion of Chinese goods until China changed its ways. Comments from the U.S. over the weekend have increased uncertainty in global markets with regards to the ongoing trade situation between China and the U.S., said Nick Twidell. Markets are now poised for more moves to the downside. Pence's remarks spoiled the party for Aussie bulls, who had pushed the currency above key level resistance at 73. U.S. cents on Friday climbed as high as 73.38, a level not seen since late August. We had our resistance at 73.25 on the bias chart. The gains came as Federal Reserve policymakers sounded cautious about a potential global slowdown, leading markets to suspect the U.S. tightening cycle may not have much further to run. That's what I'm saying. I don't even get this. This doesn't even make any sense. They don't make any comments. Then after the fact, then they say now they have concerns. The Aussie jumped 1.5% last week for its third straight weekly rise. If gains are sustained through November, it'll be the strongest monthly showing since mid-2017. It appears that a shift in tone may be emerging from the Fed, ANZ said in a morning note. It still looks like December move will happen, but there's a lot of uncertainty about the path of rate hikes through 2019. Traders see a near 70% chance of a Fed hike in December for about 77% per Fed watch. It's possible that Fed is preparing the market for a more modest hiking profile, ANZ added. Closer to home, the Reserve Bank of Australia will resume its minutes or release its minutes of its November meeting on Tuesday, followed by German Governor Philip Lowe's speech on trust and prosperity. The New Zealand dollar eased to 68.59 on Monday from Friday's top of 68.83, the highest since end of June. The Kiwi added more than 2% last week, its best weekly showing since mid-September. Sterling edges higher as May battles to save her Brexit deal. The sterling rose on Monday as British Prime Minister Theresa May sought to win support for her draft European Union divorce deal, which has come under attack from her ruling government Conservative Party, he meant to say, after a week in which we're just seeing the euro take a pop here. And we do have, like I said, I believe it's 14.45 is at 38% of that move. So something you may want to go and keep in thoughts here. It's key though. They close above 14.27 on a daily to open up the next new leg. But I believe it's 14.45 as a 38%. We can just, for those that right now, we'll quickly jump into that. Since it's making that move. Euro has gained the bullish mode. A daily close above 14.28 allows for a test of 15.21. Major level confluence is 15.16 to 50%. And the 2-hour support comes in at 13.68. But when we look at this, and I think 14.45 is going to be the 38%. We'll take a quick look. Yeah, you see that? So just be wary of that. right there along with this 1448. But a daily close above 1428 will open the door for the next move up to 1521, which is confluence with the 50%. But keep an eye on this 48 and 45. It's key that the market close above 1428 today. Let's go on and go back to the news. After a week in which a slew of ministerial resignations rocked May's government, a confident vote in her leadership has yet to materialize, and she's clinging to power. Sterling looks bid this morning, possibly due to short sellers last Friday, disappointed by the lack of a leadership vote to be called yet, said Jordan Rochester, FX analyst at Nomura. The pound rose 0.2 versus the dollar to 28.65. That takes sterling away from last week's lows of 27.25 hit last week, but the British currency was high as 31.76 early this month before the UK draft deal stuck with EU triggered a wave of resignations. Sterling, Rochester said sterling was likely to see a rise as May's campaign to promote her deal continues, but any headline confirming a sufficient number of letters had been received to trigger a confidence vote or another resignation would send the pound lower. May must convince sufficient colleagues of her plan to get it through Parliament, a formidable task given the broad criticism. She will defend her deal in a speech to the CBI Business Leaders Group annual conference on Monday, saying Britain would embark on any intense week of negotiations to try to thrash out the details of its online future relationship with the EU, its largest trading partner. Leadership challenge to PM May is still some way of securing the 48 names required, with most observers assuming there's no way they'll get 150 plus votes required to unseat her. Equally, there seems to be little chance of a PMA getting her withdrawal agreement through Parliament, ING analyst said in a note. The EU is due to hold a summit to discuss the deal on November the 25th, so certainly a date you want to go on and circle on your calendars. And dollar bulls wary after the biggest weekly drop in 2 months. The dollar steadied on Monday after posting its biggest weekly drop in 2 months last week as investors grew cautious about the near-term outlook for the greenback after dovish comments by U.S. policymakers. Against a basket of its rivals, the dollar index, the greenback, was broadly steady at 96.48, falling nearly 0.5% last week, the biggest weekly drop since late September. The dollar has been the surprise winner of 2018, having risen in nearly 10% from April lows thanks to a combination of interest rate hikes and strong data, but the growing view that the U.S. economic growth may have peaked has begun to eat away at those gains. Dovish Fed comments on Friday gave some encouragement to investors to take some profits on dollar positions. This, as I mentioned to you, actually started on Wednesday evening when Powell made his start. There may have been some gas to the fire, but these comments, that's why we addressed them on Friday morning, referencing those from Wednesday evening. Richard Clarida, the Fed's newly appointed vice chair, cautioned about a slowdown in global growth, saying that's something that's going to be relevant to the outlook for the U.S. economy. Federal Reserve Bank of Dallas President Robert Kaplan, in a separate interview with Fox Business, also said he is seeing a growth slowdown in Europe and China. Their comments came at a time when the long dollar positions have swelled to the biggest levels in nearly 2 years, despite a modest decline last week, according to futures data. Latest U.S. Treasury holdings also weighed on the dollar. China and Japan, the two biggest foreign U.S. creditors, cut their U.S. Treasury holdings further in September as foreign appetite for treasuries declined. This has been going on for most of the summer, though, so it's really not big news whatsoever. Despite the dollar's weakness, the euro failed to rally significant above the 114 level as concerns over negotiations between Brussels and Rome over Italy's budget plans sapped broader appetite. It was changing hands at 14.22. Elsewhere, sterling remained in the spotlight, with the currency expected to remain under pressure until the market gets more clarity on the progress of the Brexit deal. As I said, keep an eye on this because it's key for them to clear 14.28 on a daily. No Brexit deal fears pushed the Irish spreads to their widest in 5.5 months. The Irish government yield spreads over Germany were near the widest level since late May, as worries over the economic impact of a possible messy Brexit hurt demand for the Irish debt. PMA was disclosed a draft agreement on leaving the European Union. Britain is one of Ireland's biggest trading partners, and the border between North Ireland and the Republic of Ireland is a key issue in Brexit talks. A no Brexit deal could have an adverse impact on Ireland's economic picture and would impact risk assets and have some effect on government bonds as well. Could affect the country in general. It could make the budget position, the deficit position, and generally weigh on risk assets as well. So while the British gilt yields dropped on the reaction to the contentious British Brexit proposal, Irish yields increased with 10-year yields hitting a 1-month high of 1.045. Elsewhere, Italian government bond yields dropped 3 to 5 basis points across the curve, with analysts pointing to some conciliatory comments from five-star movement leader Luigi Di Maio as a potential driver as budget talks between Italy and EU proceed. Di Maio reiterated over the weekend the government was willing to sell real estate assets, reduce waste, and introduce safeguard clauses to ensure the deficit will not exceed the target of 2.4% of output in 2019. But he said the main reforms of the budget must remain in place. And lastly, gold dips on profit taking, some softer dollar curve declines. Gold edged lower as investors took some profits after the metal rose for 4 consecutive sessions last week. After 4 days of upside, gold is at a normal profit booking level. 1225 to 1230 is a resistance zone for gold. The dollar declined about 0.5% in the previous session as Fed policymakers signaled further interest rate increases, but also raised muted concerns of a potential global slowdown, leading markets to suspect the tightening cycle may not have much further to run. The possibility that the Fed may hold a neutral outlook beyond 2018 and a slowdown in the global economy amid the ongoing U.S.-China trade spat will keep investors a little more interested in gold's safe haven appeal. For December, the rate hike is already priced in and most likely going to happen, Lou said. What people will be watching out for is a decline in economic indicators that could result in a softening of the dollar and help gold. Holders at Spider Gold Trust, the world's largest gold-backed exchange fund, fell 0.19% to 759.68 tons. Hedge funds and money managers boosted their short positions in gold by 33,378 to 70,864, according to the CFTC. With that, we'll go on and move into the analysis. As I mentioned, here in regards to the euro, I put euro's gained bullish mode, has regained the bullish mode, but a daily close above 14.28 allows for a test of 15.21. Major level of confluence is with 15.16, and the 2-hour support comes in at 13.68. So we're looking at the 2-hour chart, but what I was referencing here was the daily, and I mentioned to you about 14.28. As I said, I'm not a fan of trend lines per se, but if we're on the precipice of a change in a direction, that's where I'll go in and point that out, put that so that it'll stand out for me. And we're seeing that here, and this is what I'm talking about. 14.28, you can see here on the daily. So it's important for them to get above 14.28. You can see how this has been an area of support, resistance, very key area here. That's why the market had jumped up here and then it quickly popped right back. So it'd be key for this market to go above 14.28. If we get a daily close above 14.28, then this market's going to be able to move 100 pips higher right here to 15.21, and that will be confluencing with 15.16, the 50% of this entire move here of 12.17 to 18.15. There. There we go. That's actually showing us 14.44. I've got 14.45. 1 pip's not going to make any difference, but you can see here we're not very far away, and more importantly than this 38%, because I think the key is going to be the 50%. That's going to align with this 15.21, and this 45 is just right here. Is this key, this daily close 14.28? That's what's going to be key. So you might see the market ease back a bit from there. So for right now, but we can go and test just above it. We'll give it the There we go. So we know that we're going to give it the 38% there, but the key is, and that's why I have the asterisk here for the on the daily, is going to be 1428. So if we can get this closed, and you can see right now we're struggling a bit with that. If we can get it above 1428, that'll be key. We'll go on and move this to a 30-minute, make this a little bit easier. Oh, I meant to go on and still need to look at it for the support. So let's go back. This is going to be support here, this 1368. Probably should move a little bit higher, actually. It was a key area, but I could try and buy those dips. So we'll say it's right there, 1372. So let's move that. It's a long ways off, but I'm saying you know where, well, actually, if we go on and pull back, is where the market would be finding that key support right there, 1372. You can make the case right here too, right there, which actually that's where they went to, 97. But there we go. So it's going to be 1372 on a pullback, okay? And let's go and move into cable. I don't think I put anything here on cable. Yeah, because cable, this is one I'm just, and for good reason. You can see here, we're so suspect. I wasn't going to go and put anything here on cable. I don't, unless I'm going to throw out some very wide lines, I think this one is just a tough one to go on and to trade for right now because you're suspect to these headlines that come out. And I couldn't see anything that I felt good about that I was going to go and put. The only thing I saw here, and I put this here, the support here, and that's about the only thing I could come up with here. So we'll go in and put it though here, but we're looking on the daily. Daily close support comes in right there at 27.75. We'll go and put that here. So we know the 27.75 is key on the daily. If they break them here, it's going to be right there, 27.47. That's certainly possible. Look at this. This is just all over the place. Well, actually, that's where we had the support, 27.47 already. Let's take a look at the resistance. That comes in at 35, but you got this little area right here. Yeah, right there, 29.37. So let's. Those are the levels, but I tell you what, I've got no idea where this thing wants to go. It's all over the place, certainly. So I'm gonna go 29.37 because anything until then, boy, what a move! You can easily quickly run all the way back up here and come right back down. So 29.37. And let's go and move in with the Aussie dollar. Okay, it says Aussie has reached the initial, and I do have the charts posted on here, but since we're already doing this live, we'll just go straight to the charts we have. But I share those charts on there. But the Aussie has reached the initial target of 73.20. We've been talking about that, even when the market had run out of gas before then. On this move right here, we kept talking about eventually getting to 73.20, and we actually had 73.25 for our bias chart resistance on Friday. Aussie's reached the initial target to 73.20. A pullback to 72.40 will find support for an eventual move to 74.54. So in time, that's what I'm looking for, is this market to make that move to 74.54. We know that this market has been under a lot of duress for some time. Look at this. You can see this down move here. It's just been absolutely relentless. And when we started to break out of it, that was the target right there, 73.20. And we did go on and make it. We even took it out by a good 18 pips. But this is what we're going to, 74.54. But in the meantime, a pullback to 72.40, I think, is going to be well supported. You can see that right here. Right there. You see these touches coming across. So we're looking for a move to 72.40. Posted that. That was yesterday or evening in the Asian update. And as far as resistance, I'll stick with our 73.25. You can see that's where they actually got, when they tried to get up in on the Asian session, they actually went up as high as 25.5. So that's going to be our resistance, 73.25. We're going to retain that, 73.25. No change on that. That stays the same. And as I mentioned before, I think moves back down to 72.40 will be well supported. We can actually take a look at a fib, see if we see anything there. Actually, 72.40 is in the middle of the road between the 23 and the 38%. That'll be a pretty good move down there if we make it all the way down to 38%. Obviously, as I said, the China U.S. trade spat is ongoing, so that's going to keep some pressure. And they said it took a little bit of wind out of the sails for the Aussie bulls. That'd be pretty good move all the way back down here, but I think any moves down here to 72.40, these are good areas to go on and step into going and get long back again with the Aussie. It hasn't had a decent run, so maybe we could pull. But like I said, any moves down here, you can even look right here. I'll show you a little bit close up. See right there. If you really want to squeeze it for Aussie's guide, I'd say right there, 72. Let's call it 31. But I'm looking for moves to 72.40 where people start to accumulate. So I guess you could look for 72.33 and then maybe another add just below the 38%. But certainly this thing looks like it'll eventually move higher. But it has had a very good strong run in the meantime. Boy, look at this mercurial run in the Kiwi. Wow. That has been really a good rip your head off move. What a move. Even taking out the 38%, boy, that thing's been a monster. We had 68.45. Oh yeah, there was our little zone-ish here. Remember? That's what we had. I actually think we had that on Thursday. And we even got past that on Friday. And look at this, just leaping. We almost made up here to that next level, which is right there. Should have been, what, 68.86. Wow, what a move. What an absolute move. Resistance is going to be the 45 right here. So that's going to stay in place, although that's even nearly 40 pips below what we had gone to. But that's going to be the short-term high. We've had a huge run. I think this market will have to pare back for some support. I don't even think the 67.58, I think they'll end up having to do a little bit more homework. This might offer a little bounce area right in here, which is 67.80 on a short-term basis, but probably this market will eventually get down to 67.37, which that's still a good, 80 pips away. So it's right here, this is going to be our support for right now on a short-term basis, 67.78 on a short-term basis, but I think that in time we'll probably make it down here to about 67.27. But for right now, let's go 67.72 for support. This market has really gotten a little bit overdone. Okay, let's go and take a look here with the dollar CAD. Okay, the dollar CAD is pausing from a staunch run. The crude remains a driving factor. Support comes in at 30.81, which is going to be the 38% of 27.83 to 32.65. Aggressive shorts can sell 32.02 with a stop at 32.45. And we'll go on and get into this. Let's take a look also. Crude got beat up so bad, it's going to have a tough time. We talked about this. I think that in time, and we had this as our 161% extension. You can see that's still holding like a rock. And that we did find support. We took a dip below 55. And at the time, we were looking at the December crude. We've moved into the January. But I think that eventually, I mentioned that we'll make a move up to about 59.35. And here on the January it equates to 59.23, but on the December was 59. But right now 59.35. But right now we're looking at January, so I think that we'll make a move up here to 59.21. And I said it'd be about 10 days time, so we still have time to go and eventually get back there. But it's going to be tough. So with that, certainly the dollar CAD was impacted. The dollar's very strong, but if you think about where the dollar's pulled back, you can certainly see the difference. Like, let's say when you look at the euro and then you look at the dollar CAD, certainly the Canadian currency being affected by the crude in a big way. So certainly there's going to go on and retain this bullishness unless we start to see this crude move higher. But like I said, for those that want to be aggressive, moves to 32. You could look for the market to go and pull back. 30.81 is going to be the 38%. So you're still looking like about 80, basically close to about a 90 pip gain. But that would be selling against this 132. Okay, so you'd be looking about a gain of about 125 pips, and you'd be risking about 43 pips. But that's on a 2-hour close. Once again, remember, be a 2-hour close of 32.45. Right there, just this key area here. But that'd be a 32, but be a 2-hour close. So selling against 32, risking 45, and be looking to go on risking the 45, but that'd be on a 2-hour close to make 125 here. So resistance is going to be here at 32.02. Also, the dollar CAD might get some support as not support. I meant for shorts as people start to price in if the Fed's going to be what they refer to as a dovish hike for December. Support on a very short-term basis is going to come in right here at 31.19. And let's take a look here on the Swissy. This is finally starting to break down. As I mentioned, it's been doing its own thing. The only thing that helps, it's not the canary in the coal mine it used to be, but it just provides maybe an additional factor. You think, okay, well, I feel a bit good. I mean, because once again, it has not been a canary in the coal mine for the dollar in any way whatsoever. It did lead the dollar out of the wilderness back in the spring, but that's all. When the dollar was making highs in the summer, you can see here the dollar was making highs in the summer, and the Swissy was just kind of up and down, up and down, up and down. So it's not a leading indicator in any way whatsoever at this point. The only thing you can look for is it's a bit of a mild confirming factor. So you can say, well, the dollar Swiss is starting to pull back, so at least it keeps me feeling good about buying the euro on a pullback, something like that. Because like I said, it's basically doing its own thing here. Although it's now finally started to, you can see here, break down from this area here. This is some pretty good support here, right here at this 99, 60, 58-ish. I'm actually going to go with that for support right there. There it is, 99.53. Resistance, well, we finally broke down. Resistance is going to be right there, par 06. If we got, the market is now starting to, and I'm just saying for its own trading, if someone's trading the Swissy, actually we'll give it just a hair bit more room. You see that right here? That's par 15, par 15. So that's going to be resistance right there, par 15. I think people will look to sell a move back to par 15. And let's go move into the dollar yen. The dollar yen has broken the upside momentum, rallies to 1340, are to be sold with the next target of 1221. We were talking about this. It's interesting how this thing is set up. Remember when it couldn't go lower no matter what. So I was looking for the move to be resolved up to 1289. I mean, 1389, which we did make it up there. And then for just to kind of hang around, we might bebop around before we go for its eventual direction, which I thought would be lower. We have moved lower. We did go and push them up here to this 1422. That level was already in place. And when we came down, we were here. I was thinking, I think we kept using 1422 because I said, I just don't see how I could take this out. So we kept using that as our resistance for quite a few days. And we finally started to see this market start to break down here. So I'm saying resistance, we're going to be, any moves back up here. Resistance right now is going to be 1340. That's resistance. So you want to sell any moves to 1340. Remember 1368 from a few days ago, I was saying, hey, look, when we were seeing the dollar yen bounce back, I said, look, sell any of these moves because the market got a little bit overdone. Sell anything. I don't see this market get above 1368. At the time, it stopped at 1363 and turned back lower for about 25 pips. And then in the overnight session, they made it right there too. I think they made it to 1367. And then they've since turned lower. And then, of course, Friday, we saw this market start to break down. So it's 1340. I'm looking for a move lower. Once again, we talked about that. It's kind of reminiscent of the move that was way earlier in the summer. We talked about that, or maybe late spring. And when remember we talked about that, and I said, remember that time we're looking for a pullback, a pretty decent pullback, and then the market broke like 300 pips. Literally 300 or just above 300 pips in the course of a 3-day run. And I'll say I'm not expecting anything like that, but I still think the market can go and move lower. We're looking to move down here for right now, for move down here at 1221. Support, if you're looking on a very short-term basis, would be 1240. But I'm thinking we'll make it to 1221. I don't think that's where we're going to stop. I think that we'll probably make it down here and take out 12. But on a very short-term basis, probably if you're short or you get short, you'd probably look to take off a decent amount or at least half the position on a short-term basis at 1221. I think we'll take out 12. We'll have to see what the environment is, but I think we'll eventually come down here this 1196 before you see some demand where you'll see a pop back up. Short-term basis, 1240 on a short-term support level. But you want to be selling this. Let's go move into the cash dollar index now. I'm going to show why there we go. Oh, and this one should be bearish also. Okay, so the dollar index has begun a pullback with a target of 95.65. Daily closing support comes in at 96.19. Confluence in with 96.21 to 38%. 2-hour support comes in at 95.93. So we'll adjust those for right now. Here's that support line, the daily support level here. That's daily closing support, just like I told you about the dollar, the euro dollar, 14.28 being a key level. I wouldn't necessarily call it resistance. I'm talking about the euro, but if the euro could close above 14.28, it opens the door for us to move another 100 pips higher towards that 15.21. But we'll have to see. You can see they're struggling with the 14.28. Probably wouldn't call it struggling, but look, there it is, that 14.28. They've even made a move. It's been run out of gas at 14.28. They ran the stops up here and they quickly faded back. So that's key daily support here, a key daily level for a breakout on the euro. Well, here we go with the cash dollar index. Key level for, in this case, support right there is going to come in right there, 96.19. So we're going to go and put this here. And you can see here, we talked about 96.19 key on the daily, 96.21 is at 38% of this move. From 93.82 on up to 97.79. We'll take a look at that on the fib. You can see that coming in right there at 96.21. So we're at a key juncture. I would say maybe not a key juncture, but a key level for the euro. Once again at the 14.28. Dollar index was still holding up even when the euro was trying to pressure that area. But this is a good little area here. Maybe we'll see it depending on how the day plays out. Maybe they'll eventually try and tag it in the European session, Asian session. But we're looking for, in case we see a further move. Now, we know that dollar bulls have gotten really overstretched, even though there's been a bit of a pair back, but very overstretched. And one of the things we talked about with the dollar index when we're looking for this to top out a week before, like I said, I didn't think we were going to go to these new highs. But once again, everybody thought that the Fed would probably reference, the equity volatility, which they didn't. And now, which to me just seems probably a little bit miffed myself, because I didn't expect this here. And like I said, you never know what's going to happen in the markets. What I'm saying is for them then, days later say, oh, we're now concerned, when they actually had the opportunity to say that. So this gave the dollar the extra juice here. Also, don't forget, when as much as that did give it some extra juice, obviously, what was a huge factor also with the dollar CAD was when the absolute bottom fell out of crude oil. I don't know where you're at, but right now gas in Texas is below now $2. That's how big of an impact this has been. And look, I remember we had the story. We don't cover crude that often and all, but remember I talked to you all about that. We had that story, and that's why I like to cover the the stories to give us, not to trade off it, but to give us a tone. And if you remember at the time, they had talked about why the dollar had gained over 4% against the emerging market currencies, but barely any moves above in comparison against the developed countries. And one of the takes was, well, crude been so high and it's having such an impact. So we talked about crude at $71. I said, hey, look, if we get a daily close above $71, that's going to open the door for us to move lower. And I was looking for a move down to $64, if you remember. Well, that's where they stopped here and they kind of bounced around, but then we went and returned back to that move. But this opened the door for the dollar to go higher. But even when the dollar moved high, I was like, wow, well, that wasn't even that much of a move. It opened the door for, I got bullish on the dollar at that time when we broke the 71 cents, if you remember. And I was like, man, this still isn't very much of a move. So we got down here and we start to come back up here in crude just a little bit. And the dollar just started to lose a little bit of its steam. Well, the Fed did go on and not reference the equity volatility we've seen, but more importantly, at the time, then the Fed was the absolute wheels coming off the caboose on this move. Look at that. That's look at this move here. I mean, that was another $9 on top of and it wasn't even that long ago. We were here, right there. So the move has been nearly $20. So that really let up things on the, let it loose for the dollar to go on and make its move. But one of the things we talked about when we talked about the dollar was that, take this off. When we were looking for this move, we said we've had such a phenomenal move in the dollar. One of the things that we kind of laid out for price structure standpoint is that, and we did see this initial move, but then the dollar came back, obviously, with the move with the crude and then the Fed, and then the crude just gave it that extra juice. One of the things that we pointed out here is that you would probably see a move, and really from a positioning standpoint, we detailed it here, but obviously you're going to detail from here. You hear the market moves up a little bit, or really any moves here you want to go in and sell. But then when you get that next follow through move, that's where you try to take us down here, and then people getting out probably a little bit further down here. Now, I'm not looking for the wheels to come off, but we've had such a phenomenal run. And if the Fed softens up its stance a little bit, what they're referring to as a dovish hike, then certainly that's going to have, pullback here in the dollar. We don't want to get overexcited, but once again, I think that this may just be just the beginning of just a decent little correction. We're not thinking the dollar's going to heck in handbasket, but probably a decent little correction is going to be in the offing. And I think at this point, any moves will be sold. Resistance will go right here. The key resistance, we're looking at your risk level, but really it's probably going to be right here, realistically speaking. That's going to be 96.93 for resistance. And support if we get a good little dip here. On a short-term basis, it's going to be right there, 95.93. And really, I don't even think it's so much that the dollar's going to be so bearish. I just think it's more about positioning. That's my take, is that those bulls are going to they're going to end up exiting out, and that could see a pretty good little wash. It's the whole reason why we thought the euro had the potential eventually. At the time, we thought the euro would go up to about, 115 and change, 116. But then, of course, the whole Italy mess got in the way. And then, of course, other factors that actually helped the dollar. But see if we go and make this move now. Now let's hurry up and move to gold, because we have to hurry up and get this show done. Gold has reclaimed the 1219 breakout area. Pullbacks to 1213 will be well supported. The initial upside target is 1237 with the pause at 1230. So let's move this out of the way. So on Friday, when I saw that, I thought that we didn't have a whole lot beyond 1223, but the market did goose up there. to get around 1226. I was referencing, I said, hey, the logical area for them to pull back is 1219, because we've talked about the key 1219 area, and certainly they didn't get there on Friday. They pulled back towards it 1222 and kind of bounced back up a little bit, but you can see in Asia they came down to 1219. But if we do see the markets had a little bit of a stretch here, I think it's still bullish. The support level that I'm looking at, where I think we can probably find some support above that, but well, I think that the market will try and attempt to defend, and you'll see a lot of buying. It's going to be 1214. It's a little bit stretched here at this point. I'm saying as far as that's a bit of a stretch. You can probably find some initial support at 1216, but this is the area I want to show here is if we get a pullback, maybe the market gets a little bit overdone. I think that 1214 is your real support, and what I want to notate is support. I think we're going to go and make it up to 1237 with a positive 1230. You see all these touches coming across at 1230. Look at that. So I think there's a little bit of a pause. Resistance on the short-term basis, we're going to go with just 1224. Certainly is bullish. $30-year bond. Had a pretty decent little run here in the bonds. It's going to be right there, 39.25. I think we've actually had a pretty good little run here that might be about as good as she gets. We had 39.22. That's fine. We'll just move that 3 pips higher. Support 30-year bond is going to be right there. 38.24. We already had a pretty good run here, so and moving on to the bunds, support's got resist gonna be right there, 60.79. We had 60.78, so it was pretty close to what we got to. We took it out by a little bit. And support's going to come in right there, 60.29. Had a pretty good little down move here in the DAX, and support right now is going to be 11,266. With resistance I'll put it right there, 11,412. And that takes it right there. And there's the buy chart. I'll go in and post that in the room. And thanks for joining us here on the European crossover.